the last activity, we worked on estimating revenue and seeing how we put that into this spreadsheet for the business plan. And now we're going to work on some of the costs. And obviously there's more costs to think about. So let me switch this over. I'm starting with the spreadsheet as I saved it through the last time, so after the last activity. So you should have a version saved on your computer where you can start just like where we left off. And I'll have to enable the content here. We were working on the revenue sheet, so I'll zoom out a little bit here. You completed that part. Now we're going to work on cost of revenues, and again we're going to go with the Rebel Raspados, which is really simple. I'm trying to just teach you how to put the numbers into the spreadsheet, but what the real work is trying to figure out what numbers make sense. And so we're going to go through this quickly, but really you need to be doing research to see what really makes sense, and then putting assumptions in your business plan in the appendix. You can have a sheet of assumptions to explain why this kind of thing makes sense. Let's start here with cost of revenue. You can see here that it has a spot for products and also services, which is really helpful if you're selling a product or a service. In this case, you're not going to do a service, you're just selling a product. So it's going to be really simple. I'm showing you the easiest way so that you can just be familiar and then put your foot in the water and then get going with your own plan. So we'll just call these shaved ice. And we're going to say that on average these shaved ice cost $1 to make per unit. See, this is material cost per unit. Maybe you would think if I could increase the number of units that I sell, maybe I can get these material costs lower. So let's just say that you actually do get them lower in year 5. You get them down to 90 cents. Now they give you a prompt here, subcontract costs. Well, you don't really have any subcontracting for the ice, so we'll just take that out. It's a green cell, so we can delete those. Now these are the total direct costs. I don't know why it shows there as a green cell, but maybe you could change that to be pink. Okay, there's the total direct costs. Unit sales, we already have those put in. You can see here that those come from the prior worksheet that we were filling out. So all of these things are based on formulas. This is what we typed in before. Now the labor costs you can see come from personnel, so we're not going to change those yet. Any formula that comes from somewhere else, just don't change it. Try to find where the information is put in and change that information. And then this is also a formula too. These are all formulas. This is a formula too. You can see in pink. This is a formula. This is a formula. We're going to change these things later once we get into the other spreadsheet. Facility costs. Now there's a couple places that you can put that on the spreadsheet and just say, well, how much does the facility cost per year? And we can give an estimate. Let's say you're going to be open for 9 months a year and it's going to cost you $500 a month for a spot in the parking lot for your trailer and for allowing you to plug in for electricity. And it's probably going to be a little bit more for the electricity. Let's say $600 per month, 9 months of operation. Okay, so you can put that in there, $5,400 each year. And I can just copy that across. No more system costs to worry about, so we'll just delete that. Other costs of revenue. Now they put in here just kind of a fudge factor of 4%. You could put that in there, maybe just put in 2%. And then all of those numbers update, right? Then this gives you these numbers. They seem totally off, but the reason they're off is that we've got these personnel costs that we need to adjust in another sheet. Let's see if any of these, all of these are formulas so you don't have to change them. Okay, now let's go over to operating expenses. And yours is a really small, easy business. Typically you would want to try to put all your assumptions down to make sure that all of these things are internally consistent and they make sense. You could have someone who you're paying a commission for getting people into the store. But we're not going to say that they're going to get a commission. There's a direct mail campaign. So we had talked about Facebook ads before. Let's just say you do Facebook ads and that costs you $300 a month. Here, let's just say $300 per month. And this is the type of thing that you're going to put in your assumptions sheet at the end of your business plan in the appendix. $300 a month for Facebook ads, 9 months per year, $2,700 a year. You could put in a lot of other types of advertising here, but we're just going to put in and we're going to call that Facebook ad. Facebook ads. Okay. So now you can see that shows your total expenses. Again, your salaries and benefits are out of whack because we have to get to that sheet. So this is one of those things that's kind of iterative because there's so many different places that you have to put in that are connected. Research and development, you don't need to do anything on that. Let's just take that out, right? You don't have testing that you have to do. Other expenses, we don't have to think about that. We do have a 6% here for other expenses as a percentage of revenue. You know, you could put in a percentage there. This is just kind of a fudge factor to think about. You know, maybe you're providing some coupons or something. Let's just put 2% in there and you can see how that adjusts. Maybe you're providing some coupons or you give some free things away. Then you have your general and administrative. And remember I had said before under the cost of revenue, we had put how much it costs for the little trailer that you would have. I'm thinking of it something kind of like Purple Penguin, that they're parked in a gas station where you pay some money for rent and electricity. So you don't need to double count it. If you already put it in another sheet, you can just take this out. Okay, just take that out. Again, it asks for other, you know, kind of, this is another fudge factor, 2% for other expenses. I just zero that out, right? And then these are all formulas, all formulas, all formulas. So now we go to personnel. All right, so who are you going to pay? Obviously, this is way more complicated than you need to be for Rebel Raspados. Maybe your business is pretty complicated. So you have a bunch of spots here that you can fill in for all of that information. I'm just going to say there's going to be a manager, and there's going to be worker 1, worker 2, worker 3. I'm putting that many workers just for convenience. So at the beginning, let's just say, what are you going to pay yourself? Let's just say that you're going to make $12 an hour, and you're going to work 25 hours per week times 4 weeks per month. That would give you $1,200 per month. 9 months equals $10,800. You're kind of assuming that this isn't the only thing that you're supporting yourself with. That's what you're going to start out as. And then over time, maybe you're going to pay yourself a little bit more. So maybe you go up to $12,000, and then $15,000, and then $16,000, and then $18,000. Okay, so you can calculate that out. That's these are just kind of really quick. Okay, so for worker 1, when would you need them? At the beginning, you don't need them that often. You're not going to pay them as much. Let's just say, let's copy down this assumption here. Let's say you're going to pay them $10 an hour, but you're only going to have them come work for the weekend. So let's just say 12 hours per week. And you really only need them during the really hot summer times, 4 months of year. So $1,920. That's going to be your first year. And then maybe we're just going to kind of grow that over time a little bit. We'll give them a few more hours. Let's say 2,200, 2,500. And we just kind of keep like this. You'll get a lot more business at certain times of year, but the rest of the year you really don't need them. We could add in some other workers. Maybe you're going to be really busy in the summer, you think. So let's just, add in another 1,500. They get to 2,000, and then, you have 2 full-time workers. And maybe you don't even think you need to have a 3rd worker. So I'm just going to delete that. You don't have research and development. Just take all of this stuff out. Anything that's green. This is just a percentage of what these numbers are, so it doesn't matter. Maybe you're going to pay an accountant $1,000 a year to do your books. Make sure that you're good on taxes. You can probably find a friend to do it for cheap like that. You don't need to pay these other positions. We're just going to take all that out. Okay, so now this is getting a little bit more in line. Manufacturing, you don't have any of that. Just take it all out. That goes to 0. Service personnel, we had put that up top before. I just put that in a different part of the spreadsheet. You can put the stuff down here that you want to put. I just put it all in one spot so you could see it. So I'm just going to put 0 in all of these. Okay, I'm going to put zeros in here too. You could put the numbers in here instead of what I put up above. It doesn't really matter that much. The key thing is that the totals are correct. Now we're getting to the point that we can kind of actually check our numbers to see if they make any sense. Wages and salary here are up to, you're going to have to provide benefits, at least FICA and Social Security and stuff. So your total compensation goes from $15,600 to $28,800. And you can see that this percentage of revenue starts to go down as you grow, which kind of makes sense. Okay, so extraordinary income. So anything that doesn't really count toward your operating, but it's still an expense. Maybe you need to set up your business, create an LLC, talk to a lawyer, put $1,000 there. But let's just say that you have to get some permits, sell, and let's just say $1,200. Now we go to taxes. As you saw in the legal section, you can set up your business in a lot of different ways. This is pretty simple. It makes sense to set it up as an LLC. So if you have it set up as an LLC, you don't have to pay federal or state income tax. So we can just zero these things out because we're in Nevada. Finally, we get to property and equipment. To receive payment, it's going to cost you $1,000 to get everything running. And then after that, you don't really need anything. Your trailer, you're probably going to need some money for that. You can get one maybe used and painted for $12,000. I don't actually know how much those things cost. That's some of the things that you'd have to do for research to see, does this expense make sense? And put that in the assumption sheet in your appendix. And then we'll take these things out here. Okay. So it's you have $13,000 in startup costs because you got to get this trailer. Okay, it looks like they put these numbers in. We're just take these things out. I actually don't remember. Let's see. When did we say we were going to get revenue? We said we wouldn't have revenue to month 4. So let's say that you're going to put in. You're going to spend this $13,000 in month 4. You don't have that. 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 Those are zeros. These are capital expenditures. Now, maybe you would need to have some capital expenditures, but I'm just trying to show you how to at least get through the spreadsheet. It's weird that they don't have a formula there. That doesn't make very much sense. If you think you need to have an additional trailer, for example, if you need to have an additional trailer, then you'd have to put that in here for the months and quarters. This is to help you do cash flow. And then you would want to put that in over here as well. Working capital, you need to remember that you can run into cash flow issues if you have a lot tied up in inventory or accounts receivable. And so you have to remember that. They have some assumptions here. You can just keep these if you want. Accounts receivable. So you sell the cones, they pay in credit card. It's going to take you a month for the credit card to pay you. So in that period of time, you could have cash problems. So it's important to recognize how much of your revenue is actually going to be accounts receivable. So they show 30 days outstanding. You're going to be receiving probably part of your money through credit cards, and so you need to model that. I'm not going to go into that, but similarly, inventory, right? You can't go to the store every day to get inventory, so you need to know, well, how much inventory do I need to have, and how many days is that? So you can play with that formula here. Current assets, how much cash do you need to have on hand? Accounts payable, that's how long are you going to take to pay your bills? Are you going to pay everything on credit cards so you pay it, but then you don't actually have to, it doesn't take out of your account for 30 days? That's where you're going to adjust these dates. And also current liabilities, if you have loans, how much are you going to try to do on bank loans and stuff. Okay, we're going to stop there for this video. So that helps you to get a good idea of all of the costs that are involved in this spreadsheet. And this is going to help you move forward in doing your financial statements that will actually show up in the business plan. All of these worksheets are just to help you to have financial statements that make sense and total correctly. So let me know if you have any questions.